Practice problems. The first one is Florida levies the following taxes at 5.5%, corporate income tax at 6%, sales tax, taxes of 4 cents a gallon on gasoline, 39.9 cents of pack of cigarettes, $0.48 a gallon on beer, and $2.25 a gallon on wine, and property taxes that vary across the countries and range from 1.4% to 2% of property values. Classify Florida's taxes into progressive, proportional, and regressive taxes. If countries with higher rates are those with high property values, then Florida's property taxes are progressive. The corporate income tax does not vary with income, so this tax is a proportional tax. Because saving increases with income, expenditure as a fraction of income decreases as income increases. The taxes on expenditure, that is sales tax, gasoline tax, cigarettes tax, beer tax, and wine tax, are regressive taxes. Second one, explain why Phil Mickelson pays his own social security tax and the PGA, that is Professional Golfers Association, pays none of it. Phil Mickelson pays his social security tax and a PGA pays none of it because the supply of Michelson's services is most likely perfectly inelastic. The elasticities of demand and supply determine who pays the tax. Is a tax on land rent or a tax on capital income more inefficient? Explain. A tax on capital income is more inefficient than a tax on land rent. A tax on capital income has the largest effect on the quantity of factors of production employed than does a tax on land rent because supply of land is perfectly inelastic, whereas the supply of capital is highly elastic. The larger the decrease in the quantity, the larger is the deadweight loss created by the tax, that is, the excess burden of the tax, and the more inefficient is the tax. Fourth, the supply of capital is perfectly elastic. The income from capital is interest received. If the tax is imposed on the income from capital, who pays the tax? The firm who demand the capital or the supply of the capital? Explain your answer. Because the supply of capital is perfectly elastic, suppliers pay none of the tax. The entire tax is paid by the demanders. Supply being perfectly elastic means that the suppliers have a huge number of options where to supply their capital, with all the options paying the same interest rate. If one of these options imposes a tax, suppliers will not supply any capital there unless the interest rate rises to compensate them fully for the tax. When the interest rate rises by the full amount of the tax, suppliers pay none of the tax. The interest rate must rise by the full amount of the tax because that is only way that the return from supplying capital to this option equals the return from supplying capital to all other options. Fifth, the supply of land is perfectly inelastic. The income from land is rent. If a tax is imposed on the income from land, who pays the tax? The demanders of the land or the suppliers? Explain your answer. Because the supply of land is perfectly inelastic, the suppliers pay all of the tax. The demanders pay none of the tax. Supply being perfectly inelastic means that the suppliers have no other choice but to supply the land. Demanders determine the maximum price they are willing to pay for this quantity of land, and that is the price. If a tax is imposed on land, demanders will not pay any of the tax because they are already paying the maximum price they are willing to pay. So suppliers pay the entire tax. In Hong Kong, sixth, the marginal tax rates on salaries ranges from 2% to 20% with a maximum average tax of 15%, which is reached on incomes of about $59,000. Compare the tax rates in Hong Kong with the US federal tax rates. In which country is the personal income tax, that is tax on salaries, more progressive one? The personal income tax in the United States is more progressive because the average rate tax or the average tax rate increases to higher levels in the United States. Hong Kong's marginal tax rates are lower than US marginal tax rates, so Hong Kong's average tax rates remain lower than the US average tax rates. Figure shows the labor market. The seventh question. First one, label the curves. What is the equilibrium wage rate and quantity of labor? Suppose the government imposes an income tax of $4 an hour on labor income. Illustrate the effect of this tax in the figure. After the tax is imposed, what is the wage rate paid by firms and what is the amount received by households? If the deadweight loss is created, shed its area. If the deadweight loss is not created, explain why not. The equilibrium wage rate is $10 per hour and the equilibrium quantity of labor is 35 hours of labor per week. If the government imposes an income tax of $4 an hour on labor income, the LS curve shifts upwards by amount of tax $4. Now the laborers would supply 35 hours of labor only if they get $14 per hour. The quantity of labor supplied decreases to 30 from 35. The new equilibrium market price is $12 an hour is the wage rate paid by firms and $8 is the amount of wage rate received by households after tax. The deadweight loss is the gray area in the figure. The figure shows the market for land. 8th question. What is the equilibrium rent and quantity of labor? If the government imposes a tax on land income of $10 an acre, what is the new equilibrium rent paid by renters? What is the amount of rent kept by landowners? What is the equilibrium quantity of land? If the deadweight loss is created, shed its area. If a deadweight loss is not created, explain why not. The equilibrium rent is $320 per acre per year. The equilibrium quantity of land is 30 billion of acres. After the government imposed a tax on land income of $10 an acre, the new equilibrium rent paid by renters would still be $320, but sellers receive a rent of $310 after tax. The equilibrium quantity of land is 30 billion acres, the same as before the tax was imposed. There is no deadweight loss created because the equilibrium quantity does not change. The amount produced remains the efficient quantity. These are the true or false which I have solved and the multiple choice questions.